Okay. So in today's session, we'll discuss about the procurement process and sales process. If any organization is going to procure any material, what standard process they follow, what are the departments involved in that process. Before we talk about that, say for example, forget about organization, take individual. Okay. If you take any individual, if they want to buy something, what process they follow. Say for example, Mr. X wants to purchase laptop. If Mr. X wants to purchase a laptop, what process need to be followed? What Mr. X will do is, Mr. X, first they have to identify the requirement. The requirement is laptop purchase. When they want to purchase when Mr. X wants to purchase the laptop, so what to do? The Mr. X has to take the permission maybe from the parents. If Mr. X is a student, Mr. X will take the permission from the parents. Once they say, okay, you can go ahead and buy the laptop, so then Mr. X will plan to buy because he requires funds. So the first point is identifying the requirement, what Mr. X require laptop. Then second step is Mr. X has to take the permission from the parents. And third step is Mr. X will try to get the quotations. We'll go and visit few shops, and as per the requirement, as per the which laptop, what configuration, the quotations need to be taken from the different shops. And after getting the quotation from the multiple shops, Mr. X has to analyze the quotations. Here, there is no big thing. Analyzing means who is offering the best price by following the same configuration. So by analyzing the quotations, he can choose one quotation to proceed with the same shop to buy the laptop. So Mr. X has to analyze the quotations. Mr. X will choose the best quotation. Then the Mr. X will go to the same shop and he'll just make the payment. Mr. X will receive the laptop. If the same case, if you apply to the organization, here multiple departments has to involve. Multiple departments will involve to buy the laptop. When you talk about Mr. X, X is the only one person who is taking care of all the activities, identifying the requirement, taking the permission from the parents, visiting the shops, purchasing the laptops, making the payment. Everything will be done by Mr. X only. But if you take the same requirement from the organization, which departments has to involve, how the process will take place, which department will take the responsibility of which activity, we'll go and discuss those points. So let's look into the procurement process, how the organizations will take the initiative of procurement, what is the business case and all. Say for example, there is one order from the customer for 100 laptops. Okay. Requirement is for 100 laptops. 100 laptops. When organization require 100 laptops, so what they will do is, say they got an order from their customer. When they verify within the inventory department, in inventory department say they have only 60 laptops. The stock availability is 60. So if you take this case, the 40 shortage they have, in that case definitely they have to take the initiative of procuring remaining 40 laptops so that they can fulfill the customer requirement. Or you can take another example, there is no customer, they need 10 laptops within their organization itself. Okay, they need 10 laptops. When they check the stock within the inventory, they don't have any laptops within the warehouse. So that is the reason the organization will take the initiative of buying the material from the supplier. It could be external requirement. There may be order from the customer, or else it may be internal requirement. Within the organization, they require laptops or any other items. So whenever they need the items, definitely they have to raise the requisition. So what inventory department will do is, if any shortage for any item which they need internally, or there may be demand from the customers, that means external demand. It could be internal demand or external demand. They have to raise the requisition. Whatever the shortage they have, for that they have to raise the requisition. Okay. Requisition. Here say organization required 100 laptops. For 100 laptops, they'll raise the requisition. And when there is some shortage, inventory department is raising the requisition. Along with that, what is the responsibility of inventory department? Primarily, they'll maintain the stock. Okay, the stock maintenance is the primary responsibility of inventory department. If there is any shortage within the warehouse, they'll raise the requisition. They'll raise the requisition. Internally, that requisition need to be approved. Okay, that should go for approvals. The requisition need to be approved, so they have to follow the approvals. What information they have to include as a part of requisition? When you talk about requisition, they'll clearly specify which items they required, how much quantity they required. So these item related specifications and primarily quantity, by which date the stock is required, those information they'll specify within the requisition. If possible, they'll include the supplier name also. That is not mandatory. When they are raising the requirement, they are raising the requisition, it is not mandatory to specify the item need to be purchased from which supplier. If they have known supplier, they can include the supplier name also, or else purchasing department will take care of identifying the suppliers. So ideally within the requisition will have item information and how much quantity, by which date that item is required. By including all the details, inventory department has to raise the requisition that should get approved. Once the requisition is approved by inventory department, maybe inventory manager or someone else who has authority to approve the new requirements. Requisition means it's a new requirement to fulfill the stock within the inventory. So once requisition is approved by inventory department will contact the purchasing department by saying that we need 100 laptops. For example, here we'll take the requirement as 100 laptops. We need 100 laptops. Internally, we got the approvals also. Please initiate the process to procure 100 laptops. So,
Lakshman, one request. Can you put some in stock so that we also become familiar with that example?
what?
Like 10 or 20 laptops in stock, so you only need to buy 80.
Yes. The same. Okay, no issues. The requirement is, okay, the customer order, for example. Since we are discussing, I'm not writing, that's okay. The customer order for, okay, customer ordered for 500 laptops. Okay, but the stock availability is only 400. Sorry. Right. So we got an order from the customer for 500 laptops, and the stock availability is 400 within the inventory department, or say warehouse. Now we have 100 laptops shortage. Now we have to buy 100 laptops. Okay, this is the case. We got an order from the customer for 500. We have stock availability 400. 100 quantity, 100 stock is, we have a shortage. So we are going to buy 100 laptops. So we are raising the requisition. Inventory department will raise the requisition for 100 quantity. So if they raised and they got approval within the warehouse team. Now inventory department has to pass this information to purchasing department by stating we have a requirement of 100 laptops and the requisition got approved. These are the details of requisition. Based on this approved requisition, okay, based on this approved requisition, the purchasing department will create, okay, RFQ, request for quotation, or else if they have a separate department called as sourcing and all, that department also will involve. Ideally, the purchasing department can take the initiative of pricing the RFQ. RFQ stands for request for quotation. Okay, depends on organization. If they have a separate sourcing department who can involve in the negotiation process with the suppliers to identify the price and the agreements, etc., the sourcing department will take care of this, raising the RFQs and getting the quotations and awarding the quotations. This process can be handled by sourcing department, or else this can be done by purchasing department. So based on the approved requisition, the purchasing department will create the RFQ. RFQ stands for request for quotation. That means purchasing department will request the suppliers to provide the quotations since they have a requirement of 100 laptops. Again, which brand, etc., that everything they'll specify. So then suppliers will respond by providing the quotations. The purchasing department will, okay, receive quotations. So purchasing department will raise the RFQs, request for quotation. They will request for quotations, and suppliers will respond to that RFQ by providing the quotations. Once purchasing department will receive the quotations, they do the quotation analysis that we call as quote analysis. Say quotation analysis or quote analysis. Okay, they are requesting for quotations, supplier are providing the quotations. That means purchasing department will receive the quotations and they'll perform the quotation analysis. That means which supplier is offering the best price, best payment terms. They look into all those points. So maybe some supplier is offering each laptop at 25,000 and other suppliers are offering at 30,000. The supplier who is offering the 25,000 maybe immediate payment. The other suppliers who are offering the laptop at 30,000, they might be giving the 2 or 3 or 4 months payment terms where the organization has to pay after 3 or 4 months only. So just they look into different parameters as a part of quotation analysis, who is giving best price, who is giving the best terms. After looking into all the terms, they'll take the decision. That means they will choose the best quotation out of somebody is unmuted. Any question? Okay, no questions. Fine. So they do the quotation analysis and they'll choose the best quotation. Choose best quotation. So these activities can be done by purchasing department, or else if it is a very big organization, if they have a separate team to handle the sourcing, okay, the sourcing department will take care of all these activities. Otherwise, the purchasing department only will handle these activities also. Right. So once they choose the best quotation, the next step is they have to place the order to supplier. So they'll create the purchase order. Okay, once they identify the right supplier who can give at best price and best terms, they'll place the order to supplier. Whatever the order they are going to place to the supplier, that order need to be approved internally. The purchasing department, the supervisor or who has authority to approve the purchase orders, they have to approve it. So approvals are required for purchase orders. Once the purchase order is approved, they'll place that order to supplier. Once the order is placed to the supplier, supplier will respond, okay, to the order by supplying the material. So whenever our organization receives the material, okay, so that will be recorded in the system as a receipt, or you can call as goods receipt note. So that simply you can call as whenever purchasing department will place the order to supplier will supply the material. Once organization will receive the material into organization, that should be recorded as a GRN, goods receipt note. Goods receipt note. So it totally depends. When you are placing the purchase order, will specify to where supplier has to supply the material. If you specify the material need to be delivered to inventory organization, inventory department will receive the material, they will record the GRN, goods receipt note, or you can call it as simply receipt. Okay, so this is the process. I'll just include as the steps. Step 1 is raising the requisition. Once that is approved, anyway, the approvals are required for the same. Second step is based on that approved requisition, purchasing department or sourcing department will raise the requisition RFQ, and against that supplier will respond by providing the quotations. Third step is the purchasing department will receive the quotations from the suppliers, and the purchasing department or sourcing department will do the quotation analysis, we call as quote analysis. Then fifth step is, okay, your fifth step is they will do the analysis and they'll choose the best quotation. The next step is the purchasing department will place the order to supplier. Whenever we'll place the order to the supplier, supplier will supply the material. The material ideally will be received by inventory department. That is the seventh step. Okay. So once inventory department will receive the material, so this information will be passed to payables department. Okay, that can be passed by purchasing department or inventory department. Ideally, the purchasing department will be in touch with the payables department. Even this receipts can be created by purchasing department also. Okay, any department can perform this activity. Ideally, it happens in the inventory, but can be done by the purchasing department since purchasing department is handling this activity. Okay. So reality happens in inventory, but that can be handled by purchasing department. With the purchasing department, they'll keep in touch with inventory and other side supplier also. This can be recorded by purchasing department as per application, but reality in the business, this receipt will be created within the inventory department. Now, purchasing department will pass this information to payables department. Okay, they'll pass information saying that we purchased so-and-so material from so-and-so supplier. Please initiate the payment process as per the terms. Now see here, inventory department is passing approved requisition information to purchasing department. Based on that, purchasing department is raising the RFQs. Now purchasing department will pass this GRN information with the payables department. Now payables department will create the purchase invoice against the GRN. Okay, the payables department will take the responsibility of creating the purchase invoice. I'll make a point as 8 and create purchase invoice. This you can call as purchase invoice or you can call as supplier invoice also. Okay, so we'll get the invoice from the supplier against the purchase, that you can call as supplier invoice or purchase invoice. So payables department will create the purchase invoice based on GRN information. Okay, once purchase invoice is created based on the payment terms, when you are purchasing, when you are placing the purchase order, we'll have a terms with the supplier when we have to pay, whether we have to pay immediately or we have to pay within 5 days or 10 days or 1 month. Those terms would be as a part of purchase order. By following the terms, we'll get the invoice from the supplier. The invoice need to be created based on the GRN information. Once purchase invoice is created, say we have to make the payment within the 10 days, then purchase payables department will take the responsibility of making the payment. So that is 9th step. Okay, the payables department will process the payment to supplier. Now whatever we are purchasing, if the purchase is related to asset purchase, you can purchase the material or you can purchase the asset. Say organization required land. In case of land also, the purchasing department will involve in the raising RFQs. Okay, they may raise RFQs to different agencies saying that in so area we require this much land, these many square feet of land we require. That's how they will raise the RFQ, and the agencies or developers, whatever you call, so they will provide the quotation, they analyze the quotation, they'll choose the best quotation. For finally they'll place the order to buy the land, and once the land purchase is done, against that purchase, payables department has to make the payment. Before making the payment, invoice need to be created against that land purchase or any other property purchase. If see the purchase invoice you can create for different purposes. Maybe you take in the services. Okay, so you render some services from the supplier. Against the services you can create the purchase invoice, or else you may spend some expenses. Against the expenses you can create the purchase invoice, or else you may create the purchase invoice against the goods which you purchased to place in the warehouse, or your purchase invoice may be related to asset purchase. Okay, when you create invoice, the invoice may be related to services which you taken from the vendors, or the expense purchase invoice may be related to expenses which you spent, and the purchase invoice may be related to goods purchase, or purchase invoice can belongs to asset purchase within the organization. So these are the cases where we can create the purchase invoice. But if the purchase invoice is related to asset purchase, the payables department will pass that information to asset department saying that there is one asset which purchasing department is purchased, these are the details related to that asset. That's how this payables department will pass asset purchase related information to asset department. That means asset related purchase invoice information payables department will pass to asset department. Based on that information, asset department will create the asset. If purchasing department is not purchasing any asset, the payables department is not going to share that information to asset department. If purchase invoice is related to asset purchase, then payables department will pass that asset purchase invoice information with the asset department. So based on that, asset department will create asset in the asset department books. If purchase invoice related to services or expense or goods, there won't be any communication between the payables department and asset department. That is the point we have to understand. Now take example of asset we purchased and the payables department will pass that information to asset department. If the purchase is not related to asset, there won't be any communication between the payables department. Now it could be related to a service related purchase invoice or expense or goods or asset, whatever it may be, payables department has to make the payment. As per the payment terms, the payables department has to make the payment. It could be immediate payment or 1 week or 10 days or 1 month payment terms. Payables department has to pay payment to supplier as per the payment terms. Once they arrive the payment terms, they have to make the payment. Once payables department will process the payment to supplier, this payment information need to be shared with the cash department. The payables department will share this payment information with the cash department. Here let me write. Here the payables department will share the purchase invoice information if that information is related to asset invoice. So if that is related to asset purchase, that means simply call as asset invoice information. This department will share with the other department. If it is an asset purchase, then only the department will share. That's all. Fine. So asset purchases happens, that information payables department will share with the asset department. Now what are the payments are processed by payables department, that information is payables department will share with this cash department. The payment information. The payables department will share payment information with the cash department. What is the responsibility of cash department? And before that, what is the responsibility of asset department? Asset department responsibility is if any assets are purchased, that information they'll get from the payables department, they'll create the assets. Based on the usage, they'll calculate the depreciation. They'll calculate the depreciation. And what is the responsibility of cash department? The cash department responsibility is they have to maintain the bank accounts. They'll maintain the bank accounts and they'll perform the bank statement reconciliations. The responsibility of cash department is they'll maintain the bank accounts which are owned by organization and they do the bank statement reconciliations. Bank statement reconciliation. That means what they'll do, they'll take statement data one side, and other side they'll take their books, whatever the data they are maintaining. If you take example of payments, as per bank statements, how many payments we made in this month, they'll take. Say for example, as per bank statement, we processed 10 payments. Other side, as per payables department, as per payables department, how many payments are processed? So they may find out all payments. So this is how they take the data. The cash department, they do the bank statement reconciliation. Here bank statement reconciliation means they'll take the statement data and they take the payables payment data. As per bank statement, 10 payments are processed. As per payables payments records, 12 payments are processed. So then they have to identify why those two are not matching. So what are the payments are reconciled, those will be reflected in the bank statement. Okay, what are the payments are cleared, those will be reflected in the bank statement. Here, as per payables department saying that they process 12 payments, the same information the payables department will pass to cash department for reconciliation purpose. As per payables department, 12 payments are processed. As per bank statement, only 10 payments are processed. What could be the reason? So they might have processed 12 payments, but only 10 payments only submitted by suppliers to the bank for clearing, the same 10 only reflecting in the bank statement. Remaining 2 payments, whatever we given to the supplier, they're not yet submitted. That could be one reason. Or they might have submitted, those might be in the still clearing process. Or else they processed a payment as per system, the checks not yet remitted to suppliers. Okay, that's how they will find out the reasons. Or else bank statement says payments are cleared 10, but as per our payables department, only 5 payments only processed for a specific period. Say in the last period, the payables department processed only 5 payments, but bank statement shows there are 10 payments are processed. Okay, so they will just look into all these points. So reasons could be without recording the payment, there may be cases they might have issued checks through manual process, or else there could be some fraud happened in the organization without recording, without making the payment through system. There might be some kind of manipulation happened, or else the reason could be they issued the checks, they forgot to enter in the payables application. These all points they can analyze, they can identify by doing the bank statement reconciliation. So this activity is done by cash department. Okay, they'll maintain all the bank accounts which are owned by company, and they'll do the bank statement reconciliation as a primary activity. So when we talk about bank statement reconciliation, the cash department will always compare statement data with the system records. If those are not matching, they'll try to find out the reasons, they'll try to fix it. Say for example, here, as per our system, 15 payments, as per bank statement 10. They may analyze and they can talk to the suppliers also. The checks, whatever they issued, 1 month back they issued, they can talk to the suppliers also. We issued checks to you. Do you have any issue in the clearing process? That's how they can keep in touch with the supplier also to help them by identifying the variants, why the checks are not yet submitted in the bank. As per system 15, as per statement only 10, 5 are missing. What are the various reasons? The supplier is not yet submitted, or supplier is facing some issue with the check, etc. These all reasons can be easily tracked, and they'll be able to focus on any kind of manipulation is happening in the organization with respect to payments, etc. They can keep eye on that. So that is a purpose the cash department will come into the picture to maintain the bank statements and do bank statement reconciliations. Okay. So, and finally, all these departments, okay, if you want to create any reports related to purchase invoices or payments, you can create within this. And if you want to do some cash department related transactions, you can prepare the reports within that. If you want to create asset related reports, how many assets you have, how much depreciation you calculate, you can create only in the asset department. The same way, inventory department, purchasing department, whatever the activities you are doing, the activity related information reports you can prepare in the specific department. So instead of preparing the reports which are respective to particular department, if you want to prepare the report which will reflect the transactions across all the department, what you can do is all department can share the activities which they are doing with the common department. Here, this cash department will share the relevant data with the common department, payables department, asset department, purchasing, inventory department. All the departments will share the data with the common department, so that based on that information, this common department can prepare the financial reports. Okay. And here one more point, when you purchase from the supplier, okay, if some the quality is not good for the item which you purchased, or else if any damage against those items, those can be returned back to the supplier also. Okay, but that is not a standard process which we do all the time. If required, we do that. Okay, that we call as purchase returns. We call as purchase returns. Okay, so the purchase returns can be handled by purchasing department, or else reality, if stock is available in inventory department will do the returns to suppliers. That can be done by any department. That totally depends on the organization. Okay, whether they are maintaining all those functions as a separate or common, accordingly they can do it. Okay, when you receive the material to organization, if any damage or if quality is quality is not good, in that case we can perform the purchase returns. For the remaining quantity only, the payables department will create the purchase invoice. They'll make the payment. The payment information they'll share with the cash department, so that with the help of that payment information, the cash department can do the bank statement reconciliation, and cash department responsibility is maintaining the bank accounts. If the purchase invoice related to asset purchase, the payables department will share that information with the asset department. Based on that asset invoice, asset department will create asset, and against those assets they calculate the depreciation, and of course they'll do lot many other activities also, asset retirements, etc. Here we are trying to understand the primary activities. And finally, all these departments can share the data with the finance department and a common department. The common department can prepare the financial report based on the finance data which they are receiving from the different departments. And once the material is received here, once we receive the material, anyway, we'll just fulfill the customer requirement. That will happen through sales process. Okay, when there is shortage, to procure the material from supplier, this is a process. Inventory will take initiative. Once we receive the material into organizations, so we'll supply the same material to respective customer. That can be handled through sales process. But this is a standard procurement process or purchasing process which you have to understand. If there is any requirement in the organization, this is how this can be fulfilled. Say today we purchased 100 laptops. Tomorrow we need 200 laptops. If you want to buy 200 laptops tomorrow, again we don't need to request for quotations. Just yesterday only we received quotation and we purchased material from the supplier. We'll proceed with the same supplier. Generally we proceed with the same supplier. Again, we don't raise RFQs, we don't receive quotations, no analysis, no choosing the best quotation. Since we identify the customer just one day back, directly purchasing department will place the purchase order to that supplier. Say you are going to purchase after 1 month. Within this 1 month period, there could be some price changes and all. Since 1 month gap is there, again you will try to get the quotations from the different supplier. But you purchase today by just following the standard process of raising the RFQs, receiving the quotation, analyzing, choosing the best. Again, if you are going to purchase next day itself, you don't need to follow the same process again since you want to purchase. You have a suppliers who given the best price, you can purchase from them. So these are the points we have to understand when you talk about this procurement process. Here in this process, so what inventory department is doing, let me explain few more points. If you have any questions, yes, we'll discuss on that. Okay, just let me add few points, then we'll proceed with the questions and answers. So what inventory department is doing? Inventory department primary responsibility is maintaining the stock, and they'll do other warehouse related activities also. Those are not very much mandatory to understand this process. The inventory department responsibility is maintaining the stock, raising the requisitions if there is any requirement, and getting the approvals for the same. To handle this, to maintain the stock, to raise the requisitions, and to get the approval to follow the approval process, from Oracle we have an application called as Oracle Fusion Inventory. By using the Oracle Fusion Inventory, you can maintain the stock and you can raise the requisitions and you can get the approvals. And what purchasing department is doing? They are creating the RFQs, they are receiving the quotation, analysis, and choosing the best quotation. They are placing the purchase orders, they are getting approvals, and receiving the material. That can be done by purchasing department or inventory department, receiving part, and purchasing returns if they are required. This all can be handled by purchasing department, or else these two activities can be handled by inventory department also. Okay, so these all activities can be handled by purchasing department. To perform all these activities, we have an application called as Oracle Fusion Purchasing from Oracle. Oracle Fusion purchasing application. In short, we call as PO. Okay, PO stands for, in terms of application, PO stands for purchasing application. In terms of transactions, PO stands for purchase order. Okay, what does it mean by PO? Means that is, in one way, application point of view, purchasing application, and transaction point of view, PO means purchase order. The inventory, the short name is INV. Okay, inventory short name is INV. And by using the Oracle Fusion purchasing application, you can handle all these activities, or else these activities you can handle in the Fusion inventory application. Okay. So that how the product is facilitated accordingly, you can use it. But reality, this can be done by inventory department. But those definitely the purchasing department will keep in touch to with the communication with inventory to do all these activities. And what payables department is doing? Payables department responsibility is creating the purchase invoices against whatever purchase department purchased and the material what they received. And based on the due date, the payables department has to make the payment. So to create the purchase invoice and to process the payments, we have an application from Oracle, that is Oracle Fusion Accounts Payable. In short, you say AP. By using Oracle Fusion Accounts Payable application, you can create the purchase invoices and you can process the payments. And the Oracle Fusion Accounts Payable application, you can share the data with asset department, that information related to asset invoice. So what asset department is doing? They are maintaining the assets, that to fixed assets. When you say assets, those are fixed assets, not current assets. So land, building, okay, vehicles, okay. These sort of assets we call as fixed assets. All fixed assets will be managed by asset department, and then calculate the depreciation based on the usage, and they'll do the retirements and different activities. To maintain the assets and to calculate the depreciation, we have an application from Oracle, that is Oracle Fusion Fixed Assets. Fusion Fixed Assets. The short name is FA, Fixed Assets. By using FA application, you can create the assets and can calculate the depreciation. So what are the payment information is processed by the payables department, or say by using this AP application, that information will be shared to the cash department. What cash department is doing? They are maintaining the bank accounts. They have to do the bank statement reconciliations. So to maintain the bank accounts and to perform the bank statement reconciliation, we have an application from Oracle that we call as Oracle Fusion Cash Management, that you can call as CM, Cash Management. And we have another application called as also Cost Management. Cost Management, that also short name is CM. That is the reason this you can call as CE also. CE means Cash Entry System. You can use any short name. CM means cash management, or you can call it CE, cash entry system, nothing but cash management. That is a short name we have for this. Okay. So once these departments will process respective transactions, the data need to be shared with the common department to prepare the financial reports. To receive the data from all these applications, or say all these departments, we have one application from Oracle called as Oracle Fusion General Ledger. Oracle Fusion General Ledger, which we call as GL application. So you can share the data from all these applications to General Ledger application. So one way you can understand these all are departments. What Oracle did, for each department, they are facilitating one application to process the department related transactional data within those applications. So here, along with this, within the purchasing application or payables application, you can create the suppliers also, from whom you want to purchase the material, or to whom like you want to create the purchase, against whom you want to create the purchase invoices, to whom you want to process the payments. For this, there will be a number of other definitions also which you have to complete. But when you talk about, okay, when you talk about this process, procurement process, these are the points we have to understand. Okay, so when I talk about procurement process, these are the departments are involved. primarily these three departments are involved. So inventory, purchasing, and accounts payables department. These three departments are involved in the procurement process. Okay, they'll procure and they'll make the payment. So they are just the result of payment they are sharing with the cash management application. The result of purchase information they are sharing with the asset department. The result of all these business transactions data they are sharing with the general ledger department or general ledger application. So these are the points we have to understand. Primarily these three we call as primary departments which we involve in this process. Inventory department, purchasing department, and payables department. For each department we have a separate application. So this process, what we discussed just now, this process we call as P2P cycle. P2P cycle. The P2P stands for procure-to-pay. Okay, procure-to-pay. That means this cycle starts with the procurement. When there is some requirement, the process will start. It will end with the payment. Where procurement process starting? The procurement process starting with the initiative of requisition creation. Okay, the procurement process will start with the requisition creation. When the process will end with the payment. Right from raising the requisition to till we make the payment, that process we call as P2P cycle, procure-to-pay cycle. Why we are calling this as a cycle? It's a cycling activity. Whenever you want to purchase, you have to raise the requisition. If required, you have to perform all these activities, or else you have to place the order. Based on, we have to receive the material, you have to create the invoice, you have to make the payment. It is completely recurring activity. Whenever you want to purchase, the same process you have to follow. That is the reason this we are calling a cycle. The cycle is covering right from procurement initiative to till we make the payment. All the activities are covered. So that is the reason this cycle we call as P2P cycle. So if you have a simple question, explain P2P cycle, this is what you should be able to deliver. The P2P cycle, if there is any requirement in the organization, inventory department will raise the requisition, they'll get the approvals. Based on the approved requisition, the purchasing department will raise the RFQs, they'll get the quotations from the vendor, they do the quotation analysis. By doing the quotation analysis, they choose the best quotation, they'll place the order to suppliers. So when they are placing the order, the purchase order need to be approved internally. Then once organization will receive the material, against that receiving, they'll record the GRN. If any damage or quality is not good, will return the material back to the supplier. And based on this GRN information, payables department will create the purchase invoice, and based on the payment terms, they'll process the payment to suppliers. The payment information will be shared with the cash department by payables department, and the purchase is related to asset purchase. Payables department will share that asset invoice with the asset department. Based on that information, asset department will create asset, and based on the usage, they calculate the depreciation. Finally, all the department will share the information with general ledger application or just common department where we can prepare the financial reports. So this is what we have to understand. This process we call as P2P cycle. So primarily these are the three departments in terms of applications. These three applications will be involved in the P2P cycle. So these are the additional applications which are connected with the same P2P to share the data to understand how further flow works. Okay, these are the points we have to understand. Any questions on this, please?
Hi Lakshman, this is Saida. I have a question.
Yep.
So when you said accounts payable is while doing a payment for services, expenses, goods and assets information goes to fixed asset department.
Correct.
But for the cash management, irrelevant of what the expenses is happening, like what payments are happening, including asset, all those four information should go to the cash management, right?
Correct. Any payment, irrespective of purpose of payment, every payment will go to cash department. They'll use that information for bank statement reconciliation. Only invoices with asset they will share with asset department. Based on that, asset department will create asset. Other they no need to share with any departments.
Thank you.
Lakshman, what would be the impact of purchasing an asset on inventory?
So inventory assets we don't maintain in the inventory. Okay, that we will maintain. If it is item, we'll maintain within the inventory. If it is asset, that will maintain the fixed assets. That's it.
So basically, there won't be anything which will be maintained in both the modules.
No, we don't need to maintain within the inventory if it is a fixed asset.
Fixed asset, okay, either here or there.
Yeah, no. We maintain within the fixed assets only. Okay, if it is a fixed asset related purchase, that will maintain the fixed asset. That is the reason the payables department will pass that information to asset department saying that we purchased this much worth of the asset and the asset details are so and so. Accordingly, that information will be maintained the fixed assets. In the inventory, we maintain the stock which we are using the business, which you may use internally as a raw material or finished good, or else it may be material which you are going to sell to your customers. Okay, that information will maintain the fixed asset in the inventory department. If the asset related to fixed asset, we never do that. Say for example, you are maintaining the laptops in the inventory, so that you should not treat as asset. Laptops you are maintaining within the inventory to sell to your customers. If laptops, if you are using in your business, say in your office you are using 10 laptops, your employees are using. So those laptops you never maintain within the inventory, since those are organization assets which are used in the business. So those need to be created in the fixed assets as assets. You should not maintain within the warehouse. That is the point.
Okay, and what happens if the purchase order is created this fiscal year and we don't have an invoice or the good received until the next fiscal year?
Okay. Just the order will represent that period as we raise the requirement, but whenever the actual transactions will take place in the respective periods, only the transaction related information will be tracked. You can do that. That happens generally. Say you are following the US financial year, in the December month you raise the purchase order. Okay. You requested supplier to supply in the next month. Yes, next month you will receive the material. Accordingly, you create the invoice and you will make the payment as per payment term. That doesn't make any difference. That is a very general scenarios where it happens. It could be different physically or it could be next period. Doesn't matter.
Okay, thank you.
Accordingly, the transactions will record. That's all.
Yeah, thank you.
Yeah, thanks.
Lakshman, what about the two-way match and three-way match? Is it there in Oracle Fusion?
Yeah, Fusion also we have that. We are also going to test in our classes as a part of P2P. I'll be covering. Okay, when you create purchase invoice, so whether the purchase invoice you want to create based on the purchase order, generally we'll create purchase invoice based on the purchase order if the purchase is related to generally expenses or services. And you may create purchase invoice by considering purchase order as well as GRN. How much material you received also you want to consider. That is one case. The third case is you will consider how much you accepted, how much you rejected the quantity. That also you may consider. Those are the different scenarios which you call as two-way, three-way, four-way matching. We will cover in our classes. I'll take you through. When you work on the P2P cycle, I'll show you how to do that. But this is here we are trying to understand what is a standard P2P cycle. That's all. Those are different concepts. We will cover in our classes.
Okay.
Yeah.
So basically, we discussed about
Please take care of it. Okay. See, when you are asking the question, please make sure that you are in the right place. At least that period.
Yeah, we discussed about 6 modules here, right? So are we going to replicate the same 6 modules in Fusion to see how these transactions can be recorded in the system?
I'm going to cover that. What we are going to cover, what we don't need to focus on, I'll discuss in today's session only. There are a few more other points also. Once we're done with that, overall, I'll talk on that point. Yeah.
Okay, perfect. Thank you.
Thanks. Any other questions? Understand this?
Lakshman,
please.
Lakshman Karthik here, Lakshman.
Please.
Good to hear your voice again. Thanks for adding me to the session. Lakshman, I have one quick question about the flow from the inventory PO to the fixed assets and then the GL. For instance, let's say we have a generator is a fixed asset item, and the generator, right? We used to maintain the generator every frequent timing, right? So for that, the purchase order will be raised in order to ordering some kind of maintenance thing will happen, right? So when you create a purchase order, we need to have the asset item number, and so that item number also we need to mention the PO, right? When you create the PO.
Yes, we use the different accounts also, the asset clearing account and all.
Okay,
Okay.
so meaning we need to have the item number. On top of that, we need to give the asset number also when you generate the PO, so that when it is processed to the AP thing, so that the same data will flow to the fixed asset as well, right?
Correct, correct. There is a concept
Okay, got it.
mass additions. By using the mass additions, you can move that asset related invoice information from payables to fixed assets.
Okay, so basically we are just adding the net book values to the assets, right?
Correct, correct.
Before and the depreciation, we need to do this process. Got it.
Correct. Yes.
Okay. So you'll be doing the sessions with us,
Yeah, we'll see that how to move that asset invoice, how to create asset,
okay,
how to move that information to fixed
got it.
assets.
Got it.
Once we
Sure.
move, how to convert that purchase invoice, asset related invoice information to fixed assets. We'll see how
Okay.
the process.
Sure. Thanks, Lakshmi. Yeah,
Yeah, fine.
that's great. Yeah.
Any other questions, please? Any questions on this, please? Okay, fine, done. So if you don't have any questions, we'll look into the sales process. Okay, fine. Now take simple example. So let's go with this process only. Okay, customer placed order for 500 quantity and we purchased 100 quantity. Now stock is available with us. Okay, go to sales process. Say customer order. Okay, customer order is for 500 laptops. But inventory level, we have only 400. By following the procurement process, we purchased 100 laptops. Now we purchased 100 also. Total, we have 500 stock availability in the inventory. Now sales department can proceed to supply the material to the customer. How the process would work, we'll see that. So ideally what happens is sales department will receive orders from the customer. Okay, sales department is responsible to receive the orders from the customer. So whatever the order sales department will receive from the customer, that we call as sales order. Okay, first once we receive the order from the customer, sales department will create sales orders. Say the sales order says 500 laptops. Okay, 500 laptops they need in 5 days. Whatever the sales order they received from the customer, as per the sales order, they have information. So they need customer required 500 laptops in 5 days. Now, what sales department has to do is, sales department has to check with the inventory department whether stock is available or not. So when they check sales department with the inventory department, only 400 quantity is available. Now sales department will talk to purchasing department. Our customer required 500 laptops in 5 days. Yes, we don't have stock within the warehouse. Is there any possibility you can get the material within the 5 days? Remaining 100 quantity, if you can get within 5 days, yes, that can be supplied to the customer. So they'll just talk to inventory department. Inventory department will speak to the purchasing department whether they can get 100 quantity of the material, 100 laptops within this 5 days, or else since customer is asking within 5 days, they'll plan to get within 4 days, that they can get 100 laptops, what is the shortage they have within the inventory within 4 days or not. There will be communication. Sales department will check with the inventory department. Since stock is not available, inventory department will check with the purchasing department whether they can purchase 100 laptops within 4 days or not. If inventory purchasing department informed to inventory department saying that yes, 100 laptops we can purchase, we can get into inventory within 3 or 4 days, then inventory department will talk to sales department saying that you can go ahead and you can confirm to the customer as we are ready, we'll be able to supply 500 laptops within 5 days. So based on that communication, even there is no stock, since there is supply possibility by purchasing, the sales department can give the confirmation to the customer. Or else other scenario could be, if stock is available, then only they give the confirmation to the customer. There are two cases. One is stock is not available, still there is a possibility to supply. How to supply? By purchasing within the time. Other cases, if stock is available, then only they can give the confirmation to the customer. It could be any scenario. Stock is available, yes, they can confirm. Stock is not available, but they can procure the stock to supply within that time. In that scenario also, the sales department can give the confirmation to the customer. Here, as per the process, initially they'll create the sales order. Whenever they get the customer order from the customer, they'll check the stock availability with the inventory department. Okay, they'll check. Okay, they'll make the inquiry. They'll check the stock availability. Okay. Or else they'll check stock supply possibilities with the inventory department. They'll make inquiry with inventory department. So inventory department is saying that stock is available. Or inventory department is saying, we spoke to purchasing department. They are saying that we can get the stock with 100 laptops within 3 days or 4 days. Anyway, we have to supply within 5 days. So based on the confirmation from the inventory that maybe stock available or stock can be stock can be arranged within the 4 days. Based on that confirmation, sales department will give the confirmation to the customer. Okay, sales department will give the confirmation to the customer, that we call as, will book the sales order. That means sales department will book the sales order. Booking sales order is nothing but giving the confirmation to the customer as we are going to supply the material, the 500 laptops within the 5 days. That is nothing but confirmation. Okay, so see, you may get 100 orders from the customers. For 100 orders, you may not fulfill the 100 orders. Maybe out of 100 orders, 20 orders you can give the confirmation. Remaining 80 orders, you can tell to the customers, no, we don't have stock available. That's what we have to do. We have to give the confirmation to the customer as we are going to supply, that we call as booking sales order. Say book sales order. Right. Now here, we have to understand how that inventory organization can be structured. So let's look into that point. So this is a total area is inventory. Okay, that you can call as warehouse management and inventory management. To maintain the stock separately, they can have a sub-inventories. Sub-inventory 1, sub-inventory 2, sub-inventory 3, 4. So sub-inventory 1, they may maintain laptops. Sub-inventory 2, they may maintain desktops. Sub-inventory 3, they may maintain mobiles. And sub-inventory 4, they may maintain the chargers or different items they can maintain within the different sub-inventories. Okay, they'll just maintain the items in the different sub-inventories to segregate the items and for easy access whenever they want to pick or whenever they want to place also. So this total area just considered as the inventory place. So within the inventory, there will be partition that we call as sub-inventory. And say you are purchasing the material from the supplier. When you purchase the material from the supplier, that information first you will take into this receiving area, or you can call it as a staging area. First you will take the material into one specific area. Once you receive the material into one receiving area or staging area, then the material need to be placed in which sub-inventory accordingly will place. Say you received 100 computers. First you will take into the staging area. There will be some common area that you can call as staging area within the warehouse management. So first you will get the material into that area. You may get through truck, and truck will unload the material in that area. From there, which item? That is a laptop. You will place in the laptop sub-inventory. You got phones. The phones you will take into staging area. From there you will place in the right sub-inventory. This is how, like, first you have to take the material into specific area. From there you have to place into specific sub-inventory. The same way when you are going to supply to the customer, so you got order from the supplier for laptops. So laptops you have in the inventory 4. Now what we have to do is you have to pick the laptops and you have to place in one area. The truck will come there and will load those laptops in that truck, and then will deliver that laptops to the customer. Okay, so when you are receiving the material, will take into one area, then will place in the right sub-inventory. When you are shipping the material also, will pick, will place in specific area that we are calling as a staging area, receiving area. For shipping purpose, you can move the material from the sub-inventory to this one area that you can call as shipping area. From there only we can move the material to the customer. That means before we receive the material into sub-inventories, we'll take into one common place. From there we'll be placing in the right sub-inventory the relevant item. The same way when you are going to sell the material to the customer, you'll pick the material from the specific sub-inventory and you'll place in one area. There you may do the packing, or without packing you can load into the truck or some other channel. That's how you can ship the material to the customer. So now this is what we have to understand. The total area we are calling as inventory organization or warehouse. And within that partitions, what we have to maintain the stock that we are calling as sub-inventories. And temporary purpose, we'll keep the stock here. Temporary purpose means we receive the material into this from the supplier. We place here 1 hour. After 1 hour, you may place those into right sub-inventories. You are going to ship to the customer, and which item you have to ship, that you will take from sub-inventory, you will place here. Truck will come in 2 hours. You will be loading the truck. That's how you can ship. When we are receiving, when the item is inflow, or when we are dealing with outflow of item. So we are maintaining the stock in the staging area for a temporary purpose. So this area we call as the staging area. So this is how ideally the warehouse can be partitioned. There could be some warehouses without sub-inventory also, without staging also, but this is a very basic inventory structure which organizations follows. Okay. So now this is a point you have to understand. By just based on these few points, any questions please? This will relate with the process also, but here to understand these few points, any questions please? No questions. Now this is how warehouse can be managed. Now we'll get into the process. Say we received order from customer for 500 quantity. We received, and the sales department spoke to inventory department. Inventory department saying that yes, 1000 stock is available. Yes, 500 easily you can supply. Then based on that, sales department giving the confirmation to the customer as we are going to supply. That is nothing but booking the sales order. The next step need to be managed by inventory department. What inventory department has to do is, so they have to move the material from sub-inventory to staging. Okay, they have to move the material from sub-inventory to staging. The physical activity will be done by inventory department, but sales department has to update that information in their books. The reason is customer will give a call to sales department, not to inventory department. Customer will give a call saying that yes, you given the confirmation to my order. So what is the status of my order? Whether that is already shipped or still you are working on that process. That update sales department has to give to customer. That is the reason whatever the activity inventory department is doing against the sales order, that need to be tracked by sales department. Whenever inventory department will move the material from the sub inventory to staging area, receiving area, the movement, okay, which movement? Moving the material from the sub inventory to staging. Say inventory department will inform to sales department the 500 laptops we moved from the laptop sub inventory to staging area. Whenever the inventory department will inform to sales department will record in their books as a quick release. Okay, quick release is happened. Quick release is nothing but moving material from the sub inventory to staging, that we call as quick release. Who has to do this activity? Inventory department will do. Whenever inventory department will do this activity, the inventory department will pass that message to sales department. The same they'll record in their books as a tracking. They have to track against the sales order. Okay, what happening against the sales order, they have to track. So quick release is nothing but moving the material from sub inventory to staging, we call as quick release. Now say inventory department or shipping department ship the material from the staging to customer department, customer location. So organization is very big, there could be separate shipping department, or else inventory department itself will take care of all these activities. Say inventory department ship the material from our organization to customer organization. The activity should be done by inventory. The same inventory department will inform to sales department saying that yes, against this order we ship the material to customer. The same sales department will record in their books as a ship confirmation. Okay, ship confirmation. So against the sales order, this all information they have to track. If customer say Today, the inventory department ship the material to customer. Material may be received by customer by tomorrow. Now, if sales department is going to get call from the customer, they'll be able to answer that call stating, yes, we ship the material. The truck will reach by tomorrow. This sort of information they'll be able to provide to the customer. That is the reason all this information need to be tracked by sales department. Okay, so this is what we have to understand. And say we ship the material to the customer. Customer received 500 laptops and 5 laptops got damaged. Then the 5 laptops customer will return to our organization. Then sales department has to record in their books as a sales returns if required. Because sales returns and purchase returns is not a regular business activity. If required, that we record. So we ship the material 500 laptops. 2 laptops got damaged. The customer will return the 2 laptops, and sales department will take the responsibility of recording the how much returns, okay, we received from the customer for the same item. That need to be tracked by sales department. This is the responsibility of sales department. Sales department create the sales orders when they get the order from the customer, and based on the stock availability, they will confirm the sales orders. Nothing but they'll book the sales order. Whenever inventory department will move the material from sub-inventory to staging area, that they'll track in their books as a quick release has happened. And whenever we move the material from the staging to customer organization, that can be tracked in the books as a ship confirm is happened. If any returns from the customer, that can be recorded as a sales returns, and what action need to be taken against the sales return, whether we have to replace the items or what exactly, that is a totally depends on the scenarios. So this is the responsibility of sales department. Now, the sales returns is optional activity. If required, they'll do it. Okay. Now, what are the quantity to which customer we shipped? Based on these details, receivables department will create the sales invoice. That means the sales department will pass ship confirmation details with the receivables department. The ship confirmation, what details they can find? To which customer, which item, how much quantity, with which payment term, to which location we delivered. All the details will be in the ship confirmation details. That information sales department will pass to receivables department. Based on the ship confirmation, okay, the receivables department will create sales invoice, or you can call as billing. They do the billing. So within the sales invoice, receivables department will track all the details to which customer, okay, and what items, how much quantity we supplied, how much customer has to pay, when customer is going to pay, how customer is going to pay, to where customer is going to send the payment. All the details will track in the sales invoice. Say customer processed payment. We received payment from the customer against this sales invoice. So whenever you receive the payment from the customer, the receivables department will record the receipt. That you can call it as cash receipt also. Okay, sales department responsibility is creating the sales invoices against the ship sales orders, against which sales or ship confirmations done by sales department, and when we'll receive the payment from the customer. In between, definitely receivables department will do the follow-up. They'll follow up the customers, they'll send the reminders, finally they'll get the payment. Whenever they receive the payment from the customer against any sales invoice, that they'll record as a receipt. Now, receivables department will send this receipt information with the cash department. The reason they have to do the bank statement reconciliation. Already discussed, cash department responsibility is maintaining the bank accounts and bank statement reconciliation. Okay, bank statement reconciliation. So here the receivables department will share receipt information with the cash department. Now what cash department will do is they'll take the bank statement. As per bank statement, how many payments we received from customer? 20 payments. As per receivables department, okay, as per receivables department, how many payments we received? Now they will just cross-check, they will reconcile, they will verify between the bank statement and the receivable department receipts. So this cash department will get the statement, they'll enter in their books, and they'll get the receipts from the receivables department, they'll maintain in their books. This is how the two records, two documents, two records they'll maintain in their books. So as per bank statement, we received only 20 payments from customers, but receivables shows 50 payments received. Why 30 is difference? Yes, we received 50 payments, or say for example the 50 we received as checks, only 20 we submitted to bank, those are cleared, that is the reason those are reflecting in the bank statement. Remaining 30 we not yet submitted to bank, that is not, those are not reflecting. Or else the scenario can be different. Here as per bank statement 25 payments, and as per receivables say 23. So our receivables saying 23 payments only we received, but bank statement is showing 25 received. How come? Maybe reality you received, but you forgot to enter those payments in the system, but you submitted checks to the bank for clearing. So these all sort of issues easily you can identify by performing the bank statement reconciliation. Okay, as a part of this process, receivables department will share receipts information with the cash department to perform the bank statement reconciliation. Which reconciliation? Receipts reconciliation. Earlier here what we discussed, that is the payment reconciliation. Okay, as per payables, how many payments? As per bank statement, how many payments? As per bank statement, how many receipts? As per receivables, how many receipts? These two need to be reconciled, verified to identify the mistakes, to correct or to take the necessary action. Finally, all these departments will share the information with the common department to prepare the financial reports. Okay. So this is a process which is involved in across these departments. Okay. So already we discussed to maintain the stock, if required to raise the requisition or any other purposes, we use the application called as Oracle Fusion Inventory. Short, we can say INV application. And what sales department is doing? The sales department responsible is creating the sales order, booking the sales orders. It's nothing but giving the confirmation to customers. They'll track quick release and ship confirmation activities in the sales department against the sales order based on the physical activity which takes place in the warehouse department. And any returns from the customer, they will handle the sales returns also. These all need to be handled by sales department. Primarily these, there will be some other miscellaneous activities also, but primarily these are the activities need to be handled by sales department. To create the sales order, to book quick release ship confirmation, to handle the sales returns, we have an application from Oracle that we call as Oracle Fusion Order Management. What we call as OM, Order Management Application. By using Oracle Fusion Order Management Application, you can create the sales orders, and when you create the sales orders, you can check the stock availability within the inventory application also. When you are creating the sales order, it will give the information whether stock is available or not. If stock is available, we'll book the sales order, otherwise we don't book. We may have a further communication to confirm that. Then we can perform the quick release, ship confirmation, sales returns, everything you can handle by using this application, which is specific to order management or sales department. Then based on the ship confirmation, the receivables department is creating the sales invoice, or you can call it billing. Whenever you get the payment from customer, that can be tracked in the receivables department as a receipt. To create the sales invoice and to create the receipts, okay, to process the receipts from Oracle side, we have an application called as Oracle Fusion Accounts Receivable Application. So Oracle Fusion Accounts Receivable Application. We call it as AR, Accounts Receivable. By using AR or Accounts Receivable, we can create the sales invoice and you can create the receipts. The customers and all you can create from the order management application or account receivables that we'll see in the system. But to understand the process, we don't need to touch those points. Where we create customer, where is the customer and all, we don't need to worry about it. Process we have to understand. Okay. So this receipt information will share with the cash department. So cash department is responsible to maintain the bank accounts and do the bank statement reconciliation activities also they have to do. To maintain the bank accounts and to do the bank statement reconciliation, we have application from Oracle called as Oracle Fusion Cash Management. In short, you can say CM or you can call it CE also. Cash entry system, nothing but cash management application. So all this data will share with the common department to prepare the financial reports, to collect the data from all the applications. We have an application from Oracle, that is Oracle Fusion General Ledger, called as GL. Remember the short names. Mostly we use the short names only when we discuss. All the time we don't need to use Oracle Fusion Accounts Receivable. Instead of calling it as, simply you can call as AR. Instead of Oracle Fusion General Ledger, say simply GL. That's how we call OM, AR, GL, CM. So these are the short names only mostly we use. So this is the process. If any organization is going to sell anything to the customer, this is the process is involved. The receivables department will receive the orders from the customer. They'll create, they'll book, they'll quick release, ship confirmation. Of course, before they do the booking, they'll check with the stock availability in inventory. Based on that, they'll proceed with the confirmation, quick release ship confirmation. Based on the ship confirmation, sales invoice, they'll receive the payment. Receipt information they'll share with the cash management, and all the data will share with the general ledger application for financial reports. So this process we call as O2C cycle. O2C cycle. Okay, O2C stands for order to cash. O2C. Order to means TO2 cycle. Order to cash. That means this cycle, this process is involving right from receiving order from customer to till we receive the payment from the customer. Okay, order to cash, right? Order. This process will trigger when we receive the order from the customer. When it will end? When you receive the payment. Okay, order to cash. I'm sorry, direction of the cycle. Order to cash. Order to cash cycle. Okay, the process starts with the order when you receive from the customer. It ends when we receive the payment from the customer. Order to till cash receiving. The activities can be handled in this cycle. So primarily in this cycle, these are the three primary departments are said. These are the three primary applications are involved. This we call as O2C cycle. Here also we are calling a cycle. Why? This is also cycling activities. It will keep repeating. Whenever you get the order from the customer, you have to check with the inventory department, then you can book it. Then inventory has to perform the quick release ship confirmation that you have to record. Then that information, the ship confirmation details, you have to pass to receivables department. They'll do the billing to the customer. When they receive payment, they'll record the receipt that they have to share with the cash management department. Then finally, all the data we have to send to general ledger application or department to prepare the financial reports. This is again cycling activity. So that is the reason this we call as O2C cycle. Okay, don't write O2C as a formula, that is just as is O2C only. You write as a formula O2 and all. Okay, so this is all about O2C cycle. Any questions to understand this process, please? Any questions on this, please? Okay. Discuss. Yeah.
One question. Do we still have the deferred COGS?
Those are the concepts. Those are the concepts. Yeah, that we have. That is a reality, right? We have deferred COGS which you can manage from the against the sales order when you are going to recognize the revenue in the receivables. Yes, we have that. That is a application specific functionality. Here, what we are discussing, the process flow. Yeah, we have in the Fusion also. Yeah. So these are the two cycles. Here, just notice what are the short names we are giving for each and every application. So based on those short names, we will see both cycles at a time, how those are connected, what are the common applications in the two cycles. Okay, which applications falls under which product family, we'll discuss all those points. Inventory we are calling as INV, purchasing application PO, accounts payable AP, cash management CM or CE, fixed assets FA, general ledger GL, right? Here inventory as inventory, order management OM, account receivables AR, GL, CM. Okay. Now we'll see these two cycles, P2P and O2C cycles in one diagram. So these are the two P2P and O2C cycles. So here whatever I am selecting, that is a P2P cycle. Okay, this half of the part is P2P cycle, and again this part is O2C cycle. If you notice here, in the two cycles, these applications are common. Inventory, cash management, and GL. These three applications are common applications in this P2P and O2C cycles. Which applications are specific to P2P? PO, AP, FA. These are very specific to P2P. Only this you can see in the P2P cycle. And OM and AR is very specific to O2C. But these three are common for two cycles. When you talk about P2P cycle, what we discussed, okay, the inventory is responsible to maintain the items, and they'll raise the requisition, they'll get the approvals, then the approved requisition inventory will pass to purchasing department, nothing but PO, Oracle Fusion Purchasing Application. PO means purchasing application. Based on that, they'll create the RFQs and they'll get the quotation, they'll do the analysis, they'll choose the best quotation, they'll create the PO, they'll receive the material. For that, they'll create the GRN. If required, they'll do the purchase returns. Then PO department will pass the information to GRN information to payables department, AP. So payables department will create the purchase invoice and they'll make the payment as per the payment terms. The AP is responsible to share payment information with the cash department, cash management to perform the bank statement reconciliations. And if this purchase invoice related to asset purchase, AP department will share that information with the fixed assets. Okay, and based on that asset related invoice information, fixed assets department will create the fixed assets and they'll calculate the depreciation. And finally, all these departments will share the information with the GL, or say all these applications. From all these applications, will transfer the data to GL to prepare the financial reports. When you talk about O2C cycle, we'll record the sales orders. When you get the orders from the customer, we'll record the sales orders. We'll check with inventory if stock is available, book the sales order. SO means sales order. Then we'll do the pick, release, and ship confirmation. If required, sales returns will record. And based on the ship confirmation details, order management will share the information with the receivables. Based on that information, ship confirmation details, receivables department, AR will create the sales invoice. When they get the payment from customer, they'll record the receipt. The receipt information AR will share with the cash management for bank statement reconciliation. Finally, all the data will send to GL for financial reports. Now, this part falls under financials. This is what we are going to focus. So this part, inventory, PO, OM, it falls under supply chain management, SCM. So PO is tightly integrated with AP. One second. I'll take your questions. Okay.
Yeah, sure.
PO is tightly integrated with AP to share the GRN information, and OM is tightly integrated with the AR to share the ship confirmation information. That means SCM applications are tightly integrated with the finance applications. So that's the reason to understand the basic flow and process. So we'll do the basic inventory setups, PO setups, and OM setups, and we'll go through this process. So in our process from PO side, we will create the PO receipt. We'll create the requisition also. Okay. So we'll create the requisition. Okay. So the inventory, we discussed requisition, right? We'll create the requisition, we'll create the PO, we create the GRN. This all will create, and the RFQ quotations, analysis, and all. Again, we have to work on the sourcing application, the Fusion application. That is separate application. We don't require that. Anyway, we don't work on those applications when you are working on finance. So in our sessions, I'll take you through how to create the requisition, how to create the POs, how to create the receipts, how to create invoice and the payables based on the GRN. These all points will cover. When it comes to OM side, we'll create the sales orders, we'll perform the booking, pick, release, ship confirmation, and the sales invoice creation against the ship confirmation. These we will be covering in our classes. Our primary focus would be on finance application. Along with that, the basic setups and the basic flow will cover from the SCM also. That's what we are calling as. We will cover P2P and O2C cycles also, but primary focus is on finance. There are a number of functionalities in the PO, inventory, OM, but we are not going to focus on all those. Reason we are not going to learn the SCM applications. Our focus is on finance, but the basic setups of the flow I'll cover in our classes. So this is what we have to understand. Any questions from anyone, please? And one more point, let me complete. So here, these many applications we have. The GL is the one application which we call a general ledger application. Other than GL, all applications we call as sub-ledger applications. Okay, other than GL, all applications we call as sub-ledger applications. From all applications, we'll get the data into GL. So whatever the data you have in the GL, the data will come from the different applications. That means if you compare other applications, the GL, those are sub parts only compared to GL. Say for example, in AP you created 100 invoices, you will send to GL. Here you created 100 sales invoices, you will send to GL. GL you will have it 200 transactions. The 200 from where it is coming, 100 from here, 100 from here. So here we have 200, sub part 100 coming from here, sub part 100 coming from here. That is the reason all these applications are subledger applications, except GL, all we call as subledger application. That is the point we have to discuss. We have to understand. So any questions now, please?
Lakshman, Karthik here, Lakshman. I know this is really great understanding the flow chart you are given. So from the PO to order management, right? I mean the sales order, or if something happens with the RMA process, return material authorization happening, right? So in that case, let's say immediately when the sales return happen, immediately we need to create a purchase order in order to send the item back to the same customer, right? So that configuration, how that works.
Receive into inventory. Okay.
Right. Agree. Yeah. So that
sales returns, that
so,
is known as RMA, return material.
Yeah.
Yeah, tell me what is
so yeah, so that part, what is integration? Let's say if the customer asks.
No, one second. That we don't cover in this finance classes. I'll take
Okay.
this flow only. Again, if you want to add RMA, that is separate functionality. We are not going to focus on each and every functionality what we have in OM. Those and all we cover in classes. Okay.
Oh, so Infusion is a separate module. It handles by a separate module. Then is that right? RMA process.
It is not a module. That is one of the functionality.
Okay. So that comes under in the order management.
Yes.
Right.
Yeah.
Okay.
Order management. From order management side, you have to initiate the RMA process against the sales order. From which sales order? Say for example, you shipped 100 quantity.
Yeah.
Customer returned 10 quantity. Now you have to create RMA against the sales order for 10 quantity. System will reduce 10 quantity from this 100 quantity against the sales order. In receivables, automatically will create credit memo with the 10 quantity. Okay, if you are discussing these points, it would be like you and me only in the session. Okay, I don't want to.
That's fine. No, that's fine. It's I agree. Totally agree. Yeah, I got it now. What you're saying here. Yeah, I got it.
Fine. Yeah. Okay, any questions from anyone, please?
Hi, Lakshman. This is Saida. I have a question. So in P2P cycle, you told me that we also send a reports from accounts payable to general ledger, but here in this two cycle together, I'm not seeing an arrow or any way that we are communicating from AP to GL.
Since I taken direction like AP to F, didn't mention that. Reality, yes, that is there as we discussed. Okay, now I'll mark it. From all the applications.
Okay. Yeah.
Bye.
Okay, thank you. Yeah, I just want to make sure. Yeah, thank you.
Even I thought on that point, I didn't mention that arrow mark earlier also. Anyway, just you asked, so I added it. Done. Fine.
Thank you.
Fine.
Lakshman, this is Salim. So we will do more deeper in finance module, right?
Correct. The course is finance, so we'll focus on finance to understand to get basic understanding on SCM. I'll take you through what information required for finance guy from SCM side also.
Thank you.
Yeah, we'll do that. Thanks. Okay. Here we'll be covering in the PO application. Yes, even I'll just cover how to create the purchase order, purchase returns, how to perform, and how to create the invoice automatically in the accounts payable, which we call as self billing. Few other concepts also will cover from PO side. Okay, that we'll do as a part of classes. Any other questions from anyone, please? If no questions, we can wind up for today.